So this is just going to be a quick market update. I'm not really going to talk about my higher time frame biases, but just what I think can happen today. Okay. So first of all, these are my daily levels, around 65, which everyone has on their charts, and then around 59.5. Okay. And this is just a very clear pivot level, and this is where we had one of the largest liquidation events in May, the largest liquidation events in 2 days for this entire range, by the way, largest since FTX. Now this high is just because we have some equal highs over here. You can see it on the daily, and then on the lower time frames it looks much clearer. Now, why do I think we can get some kind of a rejection here? That's because throughout this range, if you want to go by the typical definition of market structure, we have high, low, and then this was technically broken here. So this is when we had the lower low, and then highs, lows, lows. And this was the first time that we did not continue the downtrend. So by some definition, if price comes back here and holds, this is going to be your trigger for higher. And then there's a lot of marginal highs here. There's a lot of price action to get through, so a lot of people think that we're just gonna, the moment we get over this level, we're just gonna go to all-time highs. I really don't think that's possible, because you have to understand that there's a lot of price structure here and here that's going to come into play the moment we break up. That being said, this is the level that I'm looking at right now, and volume profile kind of supports that. Where we are trading right now, the reason there's a chop fest is because this is where a lot of volume has already been traded and will continue to be traded. And this is why a break up or down here is important, because in the last few days, this small range that we formed here is going to be very pivotal considering where price goes, because there's going to be massive supply or demand depending on where price goes. Yeah, if I'll just go to the lower time frames now. Yeah, let's see the 4 hour. So on the 4 hour, we have this market high and then another marginal high, and then we just swept that. This was also Monday's high, by the way. I'm talking about, I'll just mark that out for you. Yeah, so this sweep that I just marked out, this is Monday high, and then somewhere around here you have Monday low. Okay, so by technical definition, despite the fact that we have these sort of equal highs here, if we swept Monday high, the immediate bias should be that we come back below and sweep Monday low as well. Or we can just break down here or whatever. But that's what stats say, especially because we are in a low volume environment, which means that once this happens, you want to aim for the lows next. And another important thing is the trends. So we had a little bit of a choppy scenario here. If I'm just gonna zoom out a little bit, the red EMA here is just the 204-hour EMA. Everyone likes to look at it, but every time price actually comes into it, we always just break through. Here we front run and then we break through. Sometimes we front run and then we break through. Whenever everyone looks at a support or resistance level, you are most likely to either front run it. So this 65K, the reason I am higher time frame bearish right now is because I believe there's a very real possibility that we just leave this, or if we break through, it's going to be something massive. We can just have a 3 drive, this can look at drive 1, drive 2, and then we can have a 3 drive here and come back down. But the basic assumption says that because of how many eyes there are on this level and how many longs and shorts have developed here, we want to see like a break straight to 68K or something, right? And the reason I say that is price actually moved up a lot since the September 6th lows, and now we're just consolidating in this range. And now this range has actually been 6 days now almost. Okay, so 6 days building a lot of value here, and this is right at the quarterly VWAP. So this blue line is our quarterly VWAP. This is the standard deviation band. So anything that happens here, and you can just see the relevance of this band throughout the range that we have right now. So you go below it, come back up, you see this clean SR flip. Obviously, it's not going to act as a simple support resistance level, but you can see how this has guided price throughout this 2023 range. Whenever you have a lot of volume coming in, like either in very high volume environments or very low volume environments, the VWAPs become really important. And since we're heading into the quarterly close, this is a really important level for us to break through. And that's why I feel like the value that we're building here, and by value I mean volume, that a lot of hands have been changed here. So every time that we keep making marginal highs here, it makes me think that price is losing steam. You need a lot of fuel to be able to push through. As we talked about, there's a lot of price structure right above us as well as below us now. So if you want price to break through, you want to see like a really high volume candle, and you want price to sustain over there rather than what we have right now. We're just making marginal highs and we're leaving a lot of lows here to be swept later on. Now, am I short? Yes. I took a breakout long around here and I updated it on Telegram as well as Twitter. But the moment we started closing below, I entered a short around 64,100. And that's because I still believe that there's a scenario where we don't take the 65K level. And I'll just mark out our range here, the levels to look for, so to say. So we can take this entire thing as a range and the value that we're building in this range. If we go down to the lower time frames, right? So the reason I am very comfortable in my short right now is because once we swept Monday high, I entered somewhere around this level, right? We broke down and then we had these equal lows on the lower time frames, and then you can target this. If we look at our hourly trends, we're right up against it, and it's like a very clear fall back down. Now, where is our support level and what do we want to do? So for now, unless the range is broken, you just want to assume that the range will continue. It's very low EV to think that price is not going to range or try to take a breakout before it actually happens, right? And that's why you already saw how I trade breakouts. Now this is a massive value buildup. This is 6 days of price action and it's in a very small value range. Like the entire range is higher because of the wicks, but the value area for 6 days has now been 1.5%. This is a very tight range for Bitcoin. So if and when we break up or break down, I think it's going to be very pivotal. And on the lower time frames, what you'll see is that a lot of people want to long 61K. I think 61, some people throw around the number 61.5K. And while I do understand that there is a demand zone here, you can think of this as a demand zone, and even on higher time frame volume, you can you can look at how kind of a small, there's been very little price action, like prices just walked through here, but we still had this cluster. So the reason I feel like this demand zone is not going to hold at all is because there's not really any significant volume that's transacted here, and that means not a lot of money has changed hands here, right? So what you want to see is, if you're bullish, what you want to see is these marginal lows. You want to see a very quick sweep. So if price comes back down to here, till the value area low and the Monday low, as I already mentioned, you want price to quickly sweep, not hold below 62K at all. And if you're bearish, you want to see price stall around these prices, because there's going to be some initial bids here. So you want to see price stall here, and then you can keep on targeting the lows. For altcoins, again, this is pivotal because this sweep could mean a 10% pullback in some altcoins, and you just have to grab those opportunities. And the breakdown could be a 20% pullback. Now, what are my levels to buy the dip? Whenever, like 61K is a very easy retest. So if you ever get a very simple retest on Bitcoin, that's probably not going to work out, because people don't get dip buying opportunities so significantly, right? So 61.336 or so, this level is something that you want to keep your eye on. If we are really bullish and there's a lot of spot demand, then price can do something like this, and then I'll happily long. But my base assumption is that we have some sort of initial bounce here, but if we get down to these levels, we're probably going to 59.5K. And that's just my daily level on 59.5K. And if we do that, as we have seen throughout our larger range, price always, like when this kind of price structure happened, now a sweep of these lows was an easy long, if you see, and you did get some kind of a move here, right? You had a 4.3% move here, but then look what happened following, right? The reason is that the amount of volume and perpetual positions that have been created here will just act as that. So right now what you have is this range, a lot of longs and shorts have been built up. People are scalping the lows and highs, including myself, but eventually, if we break down or up, one of the sides is going to be in trouble. So the people who have been longing every single dip here will try to long this sweep on leverage, and will continue to do that as we just slow bleed lower. And that's usually the scenario. Another reason that I'm looking at, and the reason I'm saying that range is important, we have to go to EXO for that, and this is the delta profile, right? And then you see when we initially formed this range, you saw like the beginnings of a range already. And this is during the weekend where you had a lot of selling at the highs and then a lot of buying at the lows, right? But as we have progressed in this range, there is buying at the highs and there's a lot of absorption. Like if I actually go to the clusters, right, you see a 61 million buy, 71 million buy, all of those buys have been absorbed. And then at the bottom as well, what you're seeing is a lot of selling being absorbed. So what people have been doing typically in our entire range is just they want to try and long the breakout. So they keep buying at these highs, which causes us to SFP and cause marginal sweeps all the time. And then they keep selling at the lows. And this is very typical, but the moment our range breaks in one direction, people are going to be in trouble, and then this is going to be either massive demand or massive supply because everyone wants to get out at break even, or they are forced to close. So it's like a cascading impulse. So if we are to break up, everyone who has been shorting these lows trying to get a breakdown, whole world, they are going to be in trouble and they're going to keep closing as price moves up. That's why I think like the initial impulse can be very vicious. You're not going to do something like this and go, you won't get this retest, right? If you get this retest, it's the same concept as I said before. Easy retest means that it's probably a trap. And what's worrying me and the reason that I'm bearish is because in the past, this is 5 days. So in the past 5 to 6 days, a common pattern that we've been seeing that all of this is aggregate, but I check individual exchange data as well. So what you see is that there's very small impulses during off-market hours. So this is UTC 2 to 3. So off-market hours, you always see, and here it is, UTC 2 to 3, UTC 2 to 3. So when the volume dies down, again, like, towards the end of the session or towards the beginning of the US session, you see spot buyers step up and they try to prop price up. But what is happening in the US session and what is happening in liquid trading environments is exactly what you see here. You have perps longing this entire way and causing marginal highs. And while people are buying on the perp market, spot just sells into them. So that's my reasons for being bearish. What are the trading plans? Well, as long as we're in this range, I'm pretty bullish, especially on altcoins. I'm not going to take another long on Bitcoin. So this value area high, you see price defending it a little bit. So if we do something like this and we have a lot of spot buyers come in to kick price up, so if we get this sort of impulse, right, I'm going to try a breakout long towards 65k and above, and I'm going to trail my stop losses. But if we continue bleeding down, I'm just going to hold the shorts that I entered here. Right now it's like stop to entry and I took some profits at the value area high. And the moment we get down here, unless and until it's a quick sweep, I'm just going to keep holding my shorts, right? Where am I going to try and long? Well, unless we get to this level, I'm not going to try and long, okay? So that's pretty much it. That's my trades and that's what I plan to do. Hope this was useful for you guys. And just, I just want to say, for the daily closes, keep your eyes on the quarterly VWAP, okay? You want to see price move up, and the moment price moves up of the quarterly VWAP, like the first band, it acts as very strong support. So once we do that, you just want to ride this trend, right? Unless and until we do that, I don't think we're in trending conditions on Bitcoin. And a lot of people trying to take very directional trades are just going to get blown out. So yeah, that's been it from my side, and hope this market update helped you, and see you guys on the next one.